welcome. You're watching Ask EQ on Bloomberg Quint. I am Agam Akil.
Hey Agam, and I'm Alex Matthew. Well, if you've got questions on equity, then you know the show's perfect for you. You can send your questions in to us on Twitter, Facebook, YouTube and WhatsApp, or you can call us on 022-454-04141. You can also mail us on askpq@bloombergquint.com. Just make sure to add the AskPQ hashtag. Now, before we start the questions, we're going to go to a conversation that we had with Finolex Industries. Remember, this company posted a 14% rise in revenues led by strong growth in its key PVC pipes and fittings segment. Yash Upadhyay had a chat with CFO Anil Whabi and started off by asking him about the underlying volume growth across segments and whether it will sustain. Listen in.
See, in the PVC resin segment, the volume has grown by about 7%. And in case of pipes fitting segments, the volume has shown marginal drop by 4%. Now, this drop basically is because of the monsoon pattern. Last year, the monsoon onset was a little later, so we could take advantage of the dry period. And the other thing that you asked is about the value added. Now, we have the products, normally in agri segment, our volume is about 70% if we look on the annual basis. And 30% of our volume goes for non-agri, which is construction and real estate. So that continues to remain same. There's not much change in that.
So then this year, since we've had a deficient rain in many parts of the countries, and since you have a higher share of your revenues coming from the agri segment, how does the demand look like for the remainder of the year and say for the next year as well?
See, demand normally picks up after the monsoon season. Now, whether the monsoon is deficit or surplus, it doesn't really affect the demand. It is just because during monsoon, the pipe laying activity normally stops, that the volumes are lower. And immediately after monsoon, the third quarter, it picks up, and the fourth and first quarter are the best quarters for us. So we hope the same pattern will continue this year also and next year.
Okay, thank you, sir. But how are you seeing the input price scenario? Has there been any inflation seeping in? And what sort of an impact do you see it having on your margins?
See, if you see past 3 quarters, mainly in the PVC segment, we have been doing very well. Now, that is because the spread, the PVC EDC spread, which is normally tracked, that spread has been very good. But now, with the EDC supply constraints in the global market, this is contracting. So that obviously can affect the future margins in the coming quarters.
So, sir, except for a one-off in the same quarter last year where the margins were at about 10%, you have generally maintained a hit rate of about 20 to 22%. In a situation like this where the PVC to EDC spreads are contracting, are these margin levels sustainable going forward?
See, in past few quarters, they have been really good compared to the earlier average. They have been much higher. So obviously with the contraction, the margins may not be as good in the PVC segment. In pipe segment, whatever movement happens in the PVC segment, that is passed on. So while it may not affect much on the pipes segment, but in PVC segments, margins would be affected.
You spoke about being able to pass on the price in the pipe segment. Can you help us understand what has been that quantum of price hikes? And do you see any further necessity to increase prices?
See, in the pipe segment, normally that's an industry phenomenon. Whatever change happens in the PVC prices, that is completely passed on in the market. And the PVC prices in the market are driven on import parity basis because 50% of the demand is met through imports. So any global price change in dollar terms or in rupee-dollar equation, if the landed price of PVC changes, the pipe prices also change to that extent.
And does this change happen with a lag, or is it largely in tandem with the changing prices?
It's almost immediate.
Okay. So lastly, you've also been undertaking expansion of your pipes and fittings business. You plan to scale it up by 35%. Any updates that you could share? How any of the streams that have, any of the facilities that have come on stream?
See, this is an ongoing exercise. We keep adding capacities in modules. So each year about 10 to 15% in capacity terms we will be adding in pipes and fittings segment.
So how much of that has already come on stream, or how much of it do you expect to get it on stream in FY19? Any number that you could share with us?
Yes, at end of FY17, our capacity was 290,000 tons, which went up to 330,000 tons as of FY18 end. And in the current year, after this installations are over, we will be at 370,000 tons.
And how much of investment would be taken?
The past 2 years, the investments was about 250 crores.
So lastly, if you could leave us with the guidance for the remainder of the year, do you expect to maintain the current run rate of double-digit revenue growth, and what is the likely hit rate when it comes to the volumes as well?
See, normally we track volumes because the revenue changes with the price changes. So in terms of volumes, we had started the year with a target of 12 to 15% growth. First quarter in pipes and fittings, we grew by 9%. Second quarter, as you mentioned, there was a slight drop. So we feel that by the end of the year, we should be able to hit the double-digit growth number.
All right, well, that's a commentary coming in from Finolex Industries. With that, let me turn to the two experts that we have on the show today. Asta Jain of Hem Securities and Aditya Agarwala of Yes Securities are here to answer all of your questions. Welcome to the show, the two of you. In fact, I was using this time to actually ask the first question, which, by the way, is from Subhash. Thanks so much for joining in, Subhash, and asking a question on bed leasing and finance. We haven't heard of this company before, admission here, but we did try and pull up some details. Aditya, you were pointing out that it's seen its highest volume since 1995.
Absolutely right.
And you know, it's a one-off. So Subhash is asking for a view for the next 2 months or so, and he's also asking at what price can he average GSPL. I think I know what you're going to say about BED.
It's an avoid because the counter has seen the highest volume since its listing, probably 1995, and the stock hit continuous lower circuits from 290 to about 195, and now it's seen this sort of a volume. So it's an avoid, complete avoid. My recommendation on BED.
Very quickly on GSPL, he
GSPL,
wants to average.
Okay.
I don't know what his price is, but anyway, you can give him an 8-month view.
So Jindal Steel, this is a good price to average, probably 127 to about 130 is a good support zone. From there, stock has bounced back a little bit. So it's a good price to average at current levels. I would suggest go ahead and average, keep a stop at 125 for the entire lot that he has. Below 125, stock can slide, below 160, stock can slide to levels of 140. So at current levels of 169, it's a good price to average.
Well, I was actually just taking a look at the shareholding for BED, and only 21% is held by the promoters. The remaining, shareholding is with the public out there, and very little institutional holding, which means it's, it can be. Well, should I say manipulated? It's potentially that. But that said, we'll move on to the next query, and the next query is from Sivakumar. His question is, please suggest a mid-cap company in pharma with an excellent management pedigree and capable of growing into a big company. This is for a long-term investment, and considering it's for a long-term investment, I'm going to throw this question over to Asta. Asta, good afternoon. What would you suggest when it comes to a good mid-cap company which has a potential of growing into a large-cap one in the pharma space?
If we talk about spaces, Suven Life Sciences, my preferred pick, right? The companies are very strong. This company is posting very.
I think let's put that on hold for the time being while we figure out that Skype connection, guys. Let's take a short-term query in the meanwhile, and I'm hoping that we can get Asta back very shortly. We've got a question on Jamna Auto And on GM Breweries, for a one-year perspective, I know Ridesh is asking for a fundamental view, but I think for the time being, we'll take a technical view.
So first I'll take a look at Jamna Auto. So yes, stock has corrected from about 95 odd levels. It's come down to 70, and there's a good support zone. Stock has corrected about 50% retraced from its previous move. So 66 is a good support for the stock. Stock has bounced back from those levels. If he's looking to average, probably these are good levels to go ahead and average the stock. If he's looking for a fresh entry, definitely he can keep a stop at 65, 64 and get into the stock.
The second one was GM Breweries.
So GM Breweries for me is an avoid right now. Stock is still in a corrective wave. It's a fourth wave pullback that we're seeing in the stock. Probably maximum I see the stock heading higher is 625. From there probably it will slide again back to 500.
Okay, let's pull up HEG then, because our next question is on HEG. It's from Ajay Rai, and he wants a mid-term target on HEG. Right now, it's currently at around 4,287, 88 odd levels. And well, while it did flirt with the 50 and the 100 simple moving averages just a few days ago, it's back above that level. You know, Aditya, what would you recommend the viewer to do? He has a midterm horizon, which means that I'm assuming anywhere between 3 to 6 months.
I would strongly recommend hold on to the stock.
Right.
My target out here is 49.50, which is a sizable upside from current levels. Keep a stop at close to about 4,000 odd levels.
Right.
It gives you decent risk to reward, and there's good money making in the stock. So definitely hold on from my side.
Having said that, when it comes to the graphite manufacturers, there have been concerns raised about regulations, particularly coming out from China.
Right.
So we have had in the past fundamental experts on the show advising caution and to look at the broad-based regulatory framework when it comes to graphite and electrode prices. I think we've got Asta back on the line. Let's take another question. On, if I can pull up CES. Okay, we've lost the line again. Apologies for that, guys. We seem to be having trouble with the connection. MGL, we've got a question from Raj Shah. Raj has bought 1,500 shares of Mahanagar Gas at 820. He's asking for a 1-month view and what his stop loss should be.
So it's a good buy that he's done. Stock has fallen from the cliff about 1,300. Now it's formed a good base around 800 odd levels, and he's got into the stock. So for me, I would recommend keep a stop just below 800, close to about 790 is a good stop for the stock. And targets out here could be 880. If he's looking for a very short-term target, it will be 860. Probably if he stretches it for 3 months, it could be as high as 880, 900 as well. So it's a good buy that he's done. Hold on with a stop at 790 and look for targets of 860 to 900.
Okay, well, I'm going to move on and take the next one. It's on CESC. Again, this is, well, relatively, should I say, liquid as compared to some of the other names that have been popping up on your screen. That's the reason why I'm picking this up. Well, we have Ujjwal Kumar. He has 10 shares of CESC at 1,000 rupees per share. It's currently trading at 694, so he's clearly sitting at a potential loss right now. And he's been sitting at a loss for 1.5 years now. He wants to know about what to do with this one. And, well, should he book losses? He has a lot of questions pertaining to the fundamentals considering a certain demerger. But that said, you know, Aditya, I'm going to take over and ask you to take over as to what he can do with CESC on technical terms.
So the stock has listed post a demerger today. I think it's taken a 20% knock. So I'll advise him to keep a stop at 642, which is today's low, and hold on to the stock. If it breaks 640, it's an exit. Probably it can slide further lower to levels of 600. So for me, it's a 640 is a strict stop loss and exit below 640. I know he'll be incurring a huge loss, but that's the best trade that I would recommend him right now.
Right. Okay. Before we go on to the next query, I just want to address the you know, your well, earnings for InfoEdge right now. While we have seen a substantial growth in profitability, it's the revenues number that I am becoming a little more concerned about, where your revenues are at 265 versus 260 odd crores on a quarter-on-quarter basis. Actually, this number may not be so bad considering it's quarter-on-quarter. We're actually supposed to have it on year-on-year because they're into the seasonal services that is providing employment. Net profit, of course, at 78 crores against 63 crores, once again quarter-on-quarter, may be taken as a positive. However, it is currently under pressure, so it seems it's likely missed street expectations, and that's the reason why we you're seeing that pressure in Info Edge, which has fallen right now, correcting by as much as 2.5%. But Alex, what else do we have in terms of query?
In fact, a very interesting one coming in from Chandrasekhar, and I'm sure a lot of people have this question because I think over the past few months, it wouldn't be wrong to say, Agam, that IndusInd has been the darling, and that picture slightly changed over the last month. Let's pull up the 1 month chart for IndusInd Bank just to provide a little context going into this one. It's down about 2.5% in trade today, but in the 1 month period, it has lost about 18.5%. Asta, I'm coming to you with this question. When we're talking about IndusInd Bank, we've got a retail investor who's gotten in at a price of 1586. It's currently trading around 1376, seeing a bit of loss. This is a company, or bank rather, that a lot of people have recommended in the past. It's seen a lot of correction. Does he hold on, or should he book losses at this point and move on to something else?
Basically 1376 is the current price where the bank is quoting, so it's at its 52-week low, I say. And when a bank is at 52-week low, then definitely we can see further downside. So if he has the patience to hold, and if he is ready to witness such sort of a downside till the level of 1300 or 1250, then only it is advisable to hold. Otherwise, he can book the losses and he can exit from the stock. And my idea is he can enter into the ICICI Bank or Axis Bank at the present level, because we all know corporate banks are like doing very much better in these days, and it is in the expectation of interest rate hike and possible start of the capex cycle. These banks will be benefiting in the future. So definitely, if he has the patience to hold, then only hold. Otherwise, book losses and enter into corporate bank space like ICICI Bank or Axis Bank.
Okay, well, Chandrasekhar also has a question on Grasim, and he says that his average price on Grasim is about 1,008. Again, it's come off quite substantially, currently trading just shy of the 800 mark, so there's a 20% correction there. Aditya, what would you recommend Chandrasekhar to do with Grasim right now, considering his entry price around 1,000?
So all the Siemens stocks have taken a hit. Grasim has also taken a hit, no doubt about that. But considering current post the sharp downside that the stock has seen, 750 seems to be a good support zone. It happens to be a uptrend line support that the stock has managed to hold on for from 2014 onwards. So the corrections have halted at that trend line. So that right now stands at 750. So I would advise him keep a stop at 750, because once 750 breaks, probably stock will slide all the way down to 600. And there can be a bounce back. Markets are bouncing off yesterday, so this stock can also bounce back. So keep a stop at 750 and look for targets of 880 to about 900.
Okay.
Okay. I'm going to ask Asta if you have coverage on any of these stocks that I list right now. We've got Anantha Venkatakrishnan who's asking which you would put your money in out of the four that he's listed. The first one is Intellect Design. The second one is Vinati Organics. The third one is Sheshasai Paper. And the last one is Sterlite Technologies.
Okay, first as a disclaimer, I want to say Sterlite Technologies, we already had a coverage on the stock 6 months back, and we are continue to recommend the stock for the price target of 480 and also. So definitely Sterlite Technologies will be my favorite choice, because we had a coverage also on this space. As we all know, 5G is the upcoming area, and the way the company has posted very strong results. So we all are very bullish on Sterlite Technologies. So my first pick will be Sterlite Technology. Then I would like to go on Sheshasai Paper, because you just see the results which this company has posted, very strong set of results. And if we talk about the debt also, their debt to equity is very low. The kind of PE multiple on which this company is trading, it is at very reasonable level. So I'm very much sure that 15% upside, I mean, this is the minimum return which we can expect on this stock. So 15% minimum return is I'm expecting on this stock. So my idea is Sterlite Technology and Sheshasai Paper. These two stocks are very good stocks in the mid-cap space to put the money in.
Sterlite already seen an uptick of about 28% over the last month or so.
Right. Okay, I'm going to talk about the next one from Shankar Azmira. His question is on Prakash Industries. He says that I'm holding 400 shares at 208. Should I add more at CMP? Now, if I am not mistaken, Prakash Industries is one of those companies which has seen governance issues. It's currently at about 107. So, because this is a fundamental question, I'm going to toss it back to Asta. Asta, what would you recommend the gentleman to do with Prakash Industries? It's currently at half the entry price. Your view?
Yeah, because he has already seen such a downfall, so I think it's better to hold because he has already witnessed a quite a big downfall in the stock. My idea is, although if we talk about apart from corporate governance issue, if we talk about other parameters like financial performance, then it is not that bad. So my idea is, because we've already seen such kind of downfall, it's better to hold the stock, and his stock is trading at a reasonable level of 3 price to earning multiple. So I think there is no harm now to hold the stock at the, such levels.
You know, it's interesting because we've got a question, and I seem to have lost. Okay, we've got Abhishek Mukherjee, who's asking whether we have any views on Kilich drugs. Now, I must admit, this is the second company that you guys are pointing out that I haven't heard of in the past. It apparently manufactures a range of formulations in all dosage forms like solid, liquid, and parenteral forms, according to Bloomberg. Well, it's hit an up. It's up about 9.6% odd as of now in trade today, and it's at a 52-week high. It's got significant volumes, Aditya.
Yes, it has.
You're surprised?
I'm actually surprised because looking at the market's movement this year, the stock is up 120% year to date. That's a massive move. And congratulations to the gentleman who's caught the stock. The stock is trading at an all-time high currently. And if I look at the charts, I'm getting a target of 195. That's an immediate short-term target for 3 to 4 months. That's even as a significant upside even from current levels of 179. Gentlemen can keep a stop close to about 165 and go long even at current levels and look for a target of 195.
Okay, well, that's if you want.
That's good volume. Yes. Stock is up. That's impressive, actually. Yes.
There you have it. Hold on to it. But we'll move on to the next one on LT Foods. That's the question coming in from Deepak Batra. Let's pull up LT Food and see where that one's currently at. It's 36.5. Well, over the previous few months, again, the stock again has been very, very volatile. But it's also, it's well relatively liquid. I can't say it's extremely liquid, but it has fallen as much as 40% in the last 3 months. You know, there is no entry point or no targets. The stop losses discussed by Deepak. What would you advise him, Aditya?
I'm guessing that he's sitting on significant loss since the stock is trading down, and the stock is down about 60% year to date.
Right.
I would advise him exit from the stock. I know it's not easy, but I don't see any significant upside or immediate recovery in the stock. Probably stock can head to levels of 30 also. Looking at the chart patterns, there is a complete weakness in the stock. So my recommendation will be exit.
Okay. Let's pull up the Tata Power stock. And remember, we did speak about this, in fact, during the show yesterday when the update from the Supreme Court came in with regard to the Gujarat power plants and the power purchase agreements that could see a review. We're still waiting on updates from that development, and we'll have to see which way they go. We've got Jitendra Kumar, who's holding 400 shares of Tata Power at an average cost of 86. And he's asking what his strategy should be with this current holding. Asta, with regard to the recent developments and overall in the space, should he hold on to Tata Power?
Basically, I'm not very much optimistic about the power companies because the sector in which the government rules and regulations are there, such sectors, we are not very much positive on such sector because there is always a possibility of, government intervention. So having said that, if we talk about Tata Power, even I'm not very much positive about the results which the company has posted. So altogether, my advice is I'm not very much positive on the power space also. So I would not like to suggest him that he should hold the stock. My idea is just get out of the stock and pick other things in the other sectors. Tata Power is not my cup of tea, so I'm not recommending this stock to hold also.
Call. All right, the two of you, this is our time of the show where we're slipping into the rapid fire round. Remember, this is where we try and fit in as many questions as possible, so do keep your answers as short as possible, but as clear as possible if possible. I said possible a lot. But Rangarajan Balakrishnan, for you, Praj Industries, 6-month technical view.
Hold on with a stop at 100. I'm looking at a target of 130.
Okay, Ramesh wants a view on Himadri Specialty. Asta, what would you recommend?
Hold on the stock because chemical space is looking very good. So we are positive on the stock. Stock has shown the 51% growth in their bottom line also in the last quarter. Hold.
Entry point for the long term, Aditya, on Marksans Pharma.
I would not recommend getting into Marksans Pharma. Looking at the trend, there is more downside that is there in the stock. So even at current levels, it's an avoid from my side.
Okay, another interesting one from Swapnil. Jet Airways, buy, hold or sell? Asa, this one's for you.
If we talk about Jet Airways, my idea is hold the stock but no buy at the present level.
Fair enough. Another one for you, Infibeam. Is it a buy at current levels for you?
Not at all. I'm not very much interested in this space, so no buy for the Infibeam at the present.
All right, right. So Sandeep asks, Yes Bank at 204, hold or sell?
No, he can't.
I can't recommend.
Right. Okay, Asta, I'm gonna take this over with you. Yes Bank, hold or sell?
Hold is the choice. Hold is the choice for Yes Bank.
Okay, sticking with the same space, RBL and HDFC Bank, fresh entry for you, Asta.
For RBL Bank, definitely a fresh entry can be made, and for the HDFC Bank, my recommendation is hold.
Okay. All right, and we also have a question on Welspun Enterprises from Momin. Okay, let's take a technical check. What about Welspun Enterprises, Aditya?
Is the stock trading at 56? That's what I get from Welspun. Okay. So it's an avoid for me, Welspun Enterprises. I don't see too much of an upside at current levels. Yeah.
Okay. So we've got another one. Try and pull it up. Bimetal Bearings. It's trading at 541 or thereabouts. Volumes of just about 207 crore. Do we have anything on that?
Yes, volumes are a little thin. Post a gap up, stock is correcting. It's an avoid from my side. Probably it can correct to 420.
Okay.
All right, and I think if we have time to just get in one more query, it's on HUL. It's for the long-term buy, hold or sell. So Asta, can you help Kanishk out with HUL?
Sure, hold for the long term with a price target of 1800.
Well, all right. That's quite a few questions that we managed to slip in. I'd like to thank our guests, Asta and Aditya, for helping us out and helping our viewers, especially with all the questions that they answered. But
remember, we're just a tweet, a post or a call away, so keep your queries coming in and we promise to address all of them through our shows. You can also log on to bloombergquint.com, search for AskPQ hashtag and get the answers to all the queries that were discussed on the show today. Don't go anywhere. Up next is Power Lunch. Stay tuned to Bloomberg Quint.